Welcome everyone on today's episode. I'm here with Tim Lyons. He's a great guy, all-American type man. He is a lieutenant in the New York City Fire Department. I thought for a minute maybe he was doing this recording from there, and we might get to hear some action behind him. But he's home. He is him and his brother own Cityside Capital, which is a real estate syndication, private equity firm. Tim, welcome to the show.
Robert, well, thank you so much for having me. It was great chatting with you offline, but now we get to talk in front of everybody, so I'm glad to be here.
We get to talk. We're gonna just put it all out there.
Right.
We talked a little bit about where you're from, what you do, and what I'd love to know is about your little bit about you, and then that first real estate deal that you did. Think all the way back. I know you've been a firefighter for now 18 years. Thank you for your service there. That's thank you.
Oh, my pleasure.
And at some point you did a real estate deal. Take us there.
Yeah. So at the time, I was working full-time firefighter, and I was also working as an ER nurse in a level 1 trauma center. That was my side hustle for almost 9 years, a little over 9 years. And in the meantime, I had 3 little girls, and they were at home, and I was always at work. And my wife started to feel it. I started to feel it. So my kids started to feel it. So I had to figure something else out. Trading time for money just wasn't the thing. So I boiled it down to owning a business and real estate. Having 2 jobs already, I didn't want to go down the owning a business route. So I turned to real estate. And I did, a lot of the same stories you hear from other people. I read Rich Dad Poor Dad. I read Cash Flow Quadrant. I read Tax Free Wealth by Tom Wheelwright. And all of a sudden it just clicked and it made sense to me. And I was ready to hear it. I was ready to act on it. Where, in years past, I would have said that's a nice, thing to do. So anyway, by November of 2019, I started this whole little thing in July of 2019 on a family vacation at the beach, like where you are now. And by November of 19, I was closing on a 3-family property that I bought with a friend of mine because I was too scared to do it by myself. And I wanted to self-manage with my buddy Craig. I wanted to get that experience. I wanted to know what it felt like to be a landlord. I wanted to know if there was a proverbial 3 a.m. phone call with a flooding toilet.
Yes.
I'm going to, steal the show here and say there wasn't a 3 a.m. phone call with a proverbial toilet overflow, but there was other things, right? I mean, I had to now have the firehouse, the hospital, 3 little girls at home, and a dog, and and have a good marriage and be a good dad. And now I threw on like another job. It felt like being a landlord.
Mm-hmm.
Not only was I cutting my own lawn and shoveling my own snow, now I was doing that at the rental property, trading time with Craig. Hey Craig, I did it last time. Now it's your turn. And on top of that, I'm not very handy, even though I'm a firefighter, and most firefighters are handy. No matter what breaks, they can figure it out, and that's just not me, right? Wow. So whatever. I started cash flowing very nicely from day one. We got a great basis. We had 2 out of 3 units that were occupied upon takeover. We did a remodel of the first floor unit, and everything worked out just great. I mean, I did a little better on my taxes. I had cash flow coming in. I was really understanding. And at the time, in concert, I'm still doing my education. I'm still voraciously reading books about real estate, about entity structures, about debt markets, property management, raising capital. I mean, all in concert with this first property. And I realized that I stumbled upon something that I loved, and I couldn't get enough of it. So I had to make a choice. I couldn't have 3 jobs. I mean, I could, but it wasn't going to be working out well for me with my family.
Right.
So I gave up the nursing, and I decided to go all in on real estate. So that was the first deal, and the rest, as they say, is history. But now we started Cityside Capital. It's a private equity company that helps everyday investors who want to be passive investors, but they may not know who to turn, who to turn to, who to trust. And that's kind of where we come in. We do a lot of due diligence on the front end. But yeah, I'll throw it back to you, and we'll see what you want to unpack.
So where was that first triplex? How far from your house was it?
It was an hour and 20 minutes away from my house.
Got it. And do you still have it today, or have you?
No,
Oh,
we rode.
there's a sigh there, Tim. But did we sell something?
We did, yeah. No, we owned it for exactly 2 years, almost to the day. And we rode the COVID wave of appreciation up. And I bought it for 276. And we sold it for, I think, 410 in 2 years. And I was able to like basically double my money, double my equity in 2 years. And I said to myself, I got the experience in 2 years. I now know that I hate being an active landlord. I don't like having to run to Home Depot. I don't like to have to leave my home to go deal with whatever's happening. And I could have outsourced it to a property management company, but at the time I had Cityside Capital going in the background, and I just saw the value of passively investing my dollars into bigger, larger deals with professional property management companies. So I decided just to sell it with my buddy Craig, and we took our money and we high fived. We had a great dinner, and then we went our separate ways on real estate. But at least it got me started. It got me in the door. It got me over my limiting beliefs about owning real estate, the riskiness of it. How does it work? Is it for me? I'm just Tim the firefighter, Tim the ER nurse. What do I know about real estate? So that's how I got my start.
And did you say that was 2009 or 2019? Because you said you rode the COVID wave.
2019, November 19 to November 21, I owned that house.
Okay. So now if we go on to Cityside Capital's website, there's a little over 5,000 units listed, and there's $1.2 billion worth of value there. All right, so you're going to need to unpack this for us. How we go from a triplex 3 years ago,
New Haven, Connecticut, yep,
to that. What does that growth look like?
So, we started to network with multifamily investors and multifamily, operators. So we're talking, 1 to 4 units is generally speaking, your audience probably knows this, but for a refresher, 1 to 4 units is your standard residential space. You qualify for traditional 30-year fixed financing, but 5 units and more is considered commercial. So I had a mentor named Chris Jackson, and he was like my coach about teaching me all the things about multifamily. And he had owned and operated 7 what they call syndications or kind of group investments. And he lived in New York, and they were all down in Atlanta. And I was fascinated by that. How can a New Yorker own all those units and multi-million-dollar complexes in a different state, right? So he actually got a 43 unit under contract while I was being mentored by him, and he gave me the opportunity of a lifetime to join him on that project. So I got to see what does it mean to bring a property from letter of intent to getting under contract to getting it closed to raising the capital, doing the due diligence. And really kind of seeing the behind the curtain look on all that. And I just was blown away. I loved it. I was hooked. And, at the end of the project, he said, Tim, do you want to give raising capital a try? And I was like, Chris, I'm like, do not count on me for even $5. Like, I don't know what I can do. So I didn't have a website. I didn't have an email list. I didn't have any sexy marketing tools. I had a Gmail account. And I had my cell phone, and my brother and we just created a spreadsheet of people that we thought had money in our family, right? And friends and college roommates and whatever. And we just emailed them. We said, hey, look, Greg and I are doing this deal with, a guy that's helping us out. This is his track record, right? We borrowed his credibility and his track record, and this is what he's done. And, this is the first deal that we're doing with him. And we were able to raise $150,000. And to me, that was incredible. I mean, I never thought anybody would do that, alongside of us. But there was an appetite for it. People wanted to know more. People were telling me, hey, Tim, listen, I love you, buddy. Okay. But this is your first deal. So let me know about deals 2, 3, and 4, maybe, So that's exactly what happened, right? The first deal, kind of got off the ground. This is during COVID, by the way. That first deal closed in August or September of 2020. I mean, we're talking, the throes, that first summer of
Yes.
COVID, right? The market had gone down by a third. It was grinding back up. I mean, there was fear in the streets. We were locked down in our homes, cancel rent movements, no one's going back to the office. Everyone's, the world is ending. And I'm like, hey, I'm Tim and I'm doing a 43 unit project. Anybody want to join, So you got to think about that. And anyway, so we did that first one. And then the law of the first deal kicked in, Rob. And just in our networking, we teamed up with another group. And they were doing 144 units down in Greenville, South Carolina. And, we did our due diligence, took a trip. We, did all the things, and it was checking all the boxes. And we're saying, wow, if we can do 43, why can't we do 144? And so that's what we did. And we raised over $500,000 for that deal, because everybody saw what I was doing. I was getting a little bit more vocal on social media. I was doing some Facebook Lives. I was sending out a newsletter by this point, not very often, but I was. And people were saying, dude, what are you doing? I thought you were a firefighter. I thought you were a nurse. Now you're doing like 144 units at a time. Like that's incredible. Tell me more, let's go get a drink. Let's go get a coffee. And just very organically, I started to tell people more about what we were doing, and people were, they were intrigued and they wanted to know more about it. So right as we did 144 units, we worked again on another project in Sarasota, Florida. And by this time, the Great Migration's happening, right? People are leaving the Northeast. They're leaving Chicago. They're leaving San Francisco, right? They're leaving all these places, and where are they ending up? They're ending up in the Sun Belt and in Florida. So we have this awesome opportunity, and again, we do some due diligence, and Rob, I don't know if you're from New York or New Jersey, but in New York, you're guilty till proven innocent, and that's how I operate, right? Like I'm very skeptical. I have to ask a billion and a half questions. I got to check a lot of boxes. And I really need to feel comfortably before I jump in, especially when it has to do with money or real estate or relationships.
Sure.
So now we do a third deal, 148 units. It's a Class A property built in 2016. Gorgeous, right? And that property, even still today, is absolutely killing it. But now we had proof of concept. We just raised, $2 $500,000 raises on top of the first raise. And it was a lot of work though, right? There's a lot of property management calls. There's a lot of asset management calls. There's a lot of responsibility with investor relations. And I knew that I could build a business around that. So what Greg and I did was we went on a networking tear. And during that networking tear that we did, a lot of it via Zoom, we got introduced to a broker dealer that was really focused on building his business with commercial real estate syndications, right? So a broker dealer, if you think about Fidelity, Vanguard, JP Morgan, Goldman Sachs, they deal with stocks, bonds, ETFs, life insurance, annuities, they do all that kind of stuff. But the broker dealer that I work for or work with, we just do multifamily, right? We do syndications for multifamily and self-storage and industrial triple net leases. So people who want to diversify into alternative assets. But to do that, we needed to get our securities licenses. So Greg and I went and got our Series 82 and our Series 63. And we joined forces with the broker dealer who had relationships with now it's up to 9, almost 10 operators, soon to be 10. And they're investing in all the markets that, we want to invest in, right? You can live where you want, but you have to invest where the numbers make sense. So I'll hit timeout, Rob. I'm going to throw you a bounce pass and see if that answered any of your questions.
That answered quite a few of them, my friend, and it raised quite brought on more. So to answer your question, I'm a Pennsylvanian, and I did know your area code of the 516 from a close buddy that we grew up in and went to college together. So I wanted to clarify. So you had a mentor, right? And you read some of those fundamental books. My guess is probably Think and Grow Rich is in there as well. Usually that's like the tag team, Rich Dad, Poor Dad Think and Grow Rich. And then you had also a mentor, right? You started to see, man, I'm self-managing this triplex. I now have a I have now a part-time job, right? And it's one of those jobs that you don't know when you're going to need to be on call, because you're kind of always on call, right? So from there, and with a mentor, how much, Tim, do you think your reputation being a lieutenant in the fire department, being being a nurse, played into raising the capital from the family and friends? I've raised capital from family and friends before. I've preferred it. They know me. I know them. It's legal to do so, right? And some people are said, "Oh, I would never mix, family and business." So, what would be your answer to that? How well did it play into just you as your character, and why did you choose the family friend route first?
Well, I mean, look, let's be honest. A firefighter and an ER nurse. I mean, two pretty wholesome jobs, right? Helping professions, pretty, I'm told they're like noble professions, right? They're highly regarded, not everybody can do it. I think that had a ton to do with that because, look, I mean, I spent, up until that point, I don't know, 15 years building a reputation of who I was and what I was about. And, coaching my kids' teams and, being there as a family guy and, maybe the everyman, it's weird to talk about myself like that. But, when people saw me pivot, it wasn't because, I was trying to build a Ponzi scheme or something like that. They
Mm-hmm.
saw what I was doing. I was documenting in real time. I was getting more vocal on social media. I was going out to podcasts and just telling people what I was doing. And I hadn't
Right.
even done that much. But let me tell you something. When you do a three family, that's more than like 95% of people, right? So like now you're the guy who became, a W-2 employee. And by the way, you started building some sort of passive income. And they want to know about that. They want to know about that experience. They want to know about what it feels like. They want to know how to get started. How did you overcome limiting beliefs? And I just told them what I was doing, right? So I wasn't really reinventing the wheel. I wasn't coming up with cute marketing slogans. I was literally just telling them in real time, hey, look, this is what I'm doing. This is my money mindset where it was, a couple of years ago. Here's my money mindset today, and here's why, right? And was it a COVID passion project? It probably was. I mean, I think when you're locked up in a room, your house, you have to work on something to keep busy, and that's kind of what I think I did. So I do think being a firefighter and an ER nurse really helped me kind of get started.
Yeah.
People that know me, they know my work ethic. They know that I don't necessarily play around, right? I'm not a liar. So I think all those things together really gave people that sense of, well, if Tim's doing it, it's probably okay, right? And people, what I found through raising capital, tens of millions of dollars now, is that people don't invest in the deal, right? The sexy marketing, investor summary with the pools and the palm trees and the great lobby of the multifamily complex we're buying. People invest in me, right? They invest in my company. They invest in what we know and what we've done and our track record and our partners' track records and the due diligence that we do, right? But they know that if Tim and Greg, are investing alongside of them, you know what? Well, I know Tim, and he thinks that everyone's guilty till proven innocent, and he has a pretty good work ethic. So it just worked, right? And to your point, once you raise capital from people, there's a whole another level of responsibility, right? Because it's not just your dollars anymore, right? And I've been known to be called frugal or very cost conscious, by the guys in the firehouse. They like to make sure that I know that I'm cheap, But when it's other people's money, I'm even more dialed into, well, what are we doing? What are the sources and uses? How are we structuring this deal, right? Because it's a different responsibility. To that end, you can run through your network pretty quickly if you're doing any sort of volume of investment opportunities. And that was starting to happen to Greg and I, right? We did 3 deals in a matter of, I don't know, 7 or 8 months. And we felt like we probably had to go outside of our network to do that. And that's really where the licensing came in, was because, there's very strict rules about raising money, about doing offerings, right? Selling securities. And I'm not going to say that other people do it wrong, but I think other people do it wrong.
Yes.
I guess there's a lot of people who raise capital and are connectors of capital, and they may not just be dotting the i's and crossing the t's for Reg D, Section 506B and 506C. They just don't. But Greg and I weren't interested in getting our door kicked down by the federal authorities for fraud or for raising capital without a license or anything like that. So it just made sense, and everything kind of aligned right in time. And and then from there we just we took off.
Got it. So when you had the deal, and the nature of this question comes from one of our first episodes of the Living Well with Rent Well, where we interviewed a developer in Philadelphia, Gary Jonas of the Howe Group. And he is somebody that says, if you have a 5-year plan for real estate, I can't help you. But if you have a 15-year plan, I absolutely can. And he's above, I think, 5,000 doors at this point, owner, developer, vertically integrated. And what he says is, eventually, Rob, in your real estate investing, you need to use outside capital, and you're going to be getting smaller pieces of much larger deals. And so for myself, if I go to a real estate club and somebody asks me, well, how many doors do you have? Because that's like what you do, right? A lot of people, how many doors? And I want to almost pause them and be like, well, how many are occupied? How many are vacant? How many do you actually want to own? Maybe you have some that you really don't, right? Just bring the egos in the room down. So my answer is, well, right now I'm at about a little over 100 doors, and I have a little over 30 some odd % ownership in those 100 doors, right? Some I own 100%, and others I own 32%, right? And then business partner owns the other, and here it is. And then there's outside capital. And so for one of those deals where you're raised in the early stages to $500,000, and you have this asset that's worth tens of millions of dollars, I'm assuming a 100-unit building is going to be at least worth over $10 million. Could be double that. What % does Cityside end up with usually on those types of projects?
So early on, it was a couple of percentage points, right? It wasn't a whole lot because we also we were asset managers, right? But we were property managers, but we were also new, at this, so we weren't doing a lot of the heavy lifting. We were kind of learning and earning as we were going along.
So you were on the GP side with
on the GP side.
You're on the GP side. I think this is really important for as people scale up and to understand. It's a small. Yes, it's the big pool. It's a smaller slice of a larger pool, and other capital firms come together on these sometimes, and sometimes on the GP side, right? Somebody found the deal. Sometimes somebody's going to be managing the property manager. Maybe somebody else is signing on some debt. So you were part of, and that's where you said you went heavy on the networking, and you earned your right to be at that table on the GP side. Is that a fair way to surmise it, Tim?
Well, I mean, that's a great way to put it. I had a set of skills, right? My brother Greg, he's a director of real estate for a company down in Virginia. We had a set of skills, whether it was, due diligence or, making calls and getting, project management type stuff, getting the checklist done, right? Getting things done was something that we could help out with. The raising capital, we weren't even that wasn't a thing for us. Like, yes, we had done it, but we were like, wow, like, all right, now we're getting towards the end of the project. Let's see if we can, I don't know, hit our email list on Gmail again. It wasn't even an email list. It was just us literally clicking names off of our,
Yes.
contact list. But then when we really got into the 3 properties and realized, that commercial real estate in general, I'd say, is a team sport, right? And everyone has their strengths and their weaknesses. And I was not going to be leaving, New York for Florida, Texas, Arizona, Tennessee. I wasn't leaving, right? So I was never going to be boots on the ground. I was never going to be on site, as much as I would want to be. Greg and I really had to kind of do a deep dive and say, where are we going to add the most value to Cityside Capital, to our partners? Like, where can we really dial in? And we're like, we raised a good amount of money, like, and early on. Why don't we try to focus on investor relations and raising capital? And Tim likes to be in front of a camera. So Tim, why don't you do some YouTube videos, and why don't you go on some podcasts? And yeah, I can do that. Right. And I don't know, I can do some social media stuff, and I love to talk. I don't know if you could tell that yet, but I go to some real estate meetups and all over the place, different counties, different states sometimes. And then I was asked to start speaking at some events. Right. And now all of a sudden you're on a stage and you have like instant credibility because, oh my God, this guy's on a stage. He must be a somebody. And meanwhile, I'm like a year or two, in. And what I found was that even though I might be a year or two in, I'm a year or two ahead of a lot of people. Right. And a lot of people know or desire to do what we do, or to be involved in stuff that we do, or real estate in general, but they just don't know how to get started. They have those limiting beliefs. It all goes back to that. So if you can connect with folks and really kind of, resonate my story with theirs, all of a sudden they'd be like, hey, well, listen, here's my name, here's my email address. Why don't we go get coffee? Why don't we go to dinner? Why don't we get some beers, whatever it might be? Or, what, just put me on your email list. I'm an accredited investor. I've done 10 of these things. I'd like to know what you're working on next. Right. And now all of a sudden, we built up Cityside Capital to be, a private equity company. And, now we start doing deals, and people are like, yeah, remember we met at the XYZ meetup and we had dinner that night. And now I'm ready to invest, $500,000. Like, are you kidding me? Like, this is how it works. And, it just kind of, then word of mouth kicks in, right? Hey, you want to be a passive investor? You got to talk to Tim and Greg, and it kind of just took off on us, and it took off in a big way. I think because of the uncertainty in the markets, the uncertainty with people's businesses. I mean, we have a physician friend of ours who's an investor, and during COVID, they were told in no uncertain terms by the state, you can't do procedures. But he's a part owner of a surgery center. He has a private practice. He still has to pay his staff. He still had to pay the mortgage on the surgery center. He still had to do all that. And he couldn't operate. He couldn't do procedures. And that was the day that he called me and said, Tim, I got to figure out some of this passive income stuff that you're talking about, because I just got told that I can't work,
Yes.
So, and there's countless stories like that.
So and this is not the space that I'm incredibly familiar with. So help us understand.
Yeah.
When you're saying I'm a private equity firm, is that because of the licenses that you went out to get, versus saying it seems like you're a private equity firm that's involved in real estate syndications for various asset classes?
Yes.
And most of the time I'm meeting where they're networking event and they're more syndicators. They have their 50XX, they have that document that they've paid for. And it seems like you're doing on the next level, where you went and got licensed and you've created this firm.
That's 100% right. So, all right, so let's just break it down for everybody out there, right? So, so private equity, in the sense that, look, if you have, I don't know, $500,000 in the bank, and it's in a checking account, but you're like, you know what, I think I should be doing something. You have a couple options. You have a ton of options. But what do most people do? They go to the local financial advisor. Um, it's called an RIA, a registered investment advisor, and they might work for LPL Financial. They might work for Wells Fargo. They might work for a private label, and they're going to help you. They're going to get to know your goals, and they're going to get to know you want for cash flow, retirement. And they're going to try to sell you securities, right? It sounds a little bit nutty to say, but they're going to try and sell you securities, whether that be mutual funds, exchange traded funds,
Yes.
bonds, CDs, stock portfolios, annuities, life insurance, and they're going to try to build a portfolio, and that's great. That works for a lot of people. But there's also, and I didn't realize this at the time, is that there's an insane amount of people that doesn't work for. They want income producing assets. They want quote unquote alternative options from the everyday menu of stocks and bonds. Maybe it's too volatile. Maybe they're looking for income. Maybe they're looking for, whatever their financial goals might be. It might not be satisfied by that financial advisor and what they have to offer. And I didn't realize how big the market was, but it's enormous, right? So now let's say somebody wants to be involved in real estate. They make a lot of money, or they make a good amount of money, or they had a liquidity event, or they had they sold a property that was in the family for 30 years. And they don't want to be an active landlord, right? And you have to be really clear about, active landlords doing all the things, being in charge of everything, the debt, the bills, the rent collection, everything, versus being passive, and you're letting go of that, decision making quality, and you're trusting your capital with an operator that is either vertically integrated and they own all their own property management companies and asset managers. And this is what they do every day for a living, and they have multi-million-dollar portfolios. Because that's what pension funds and life insurance companies and larger pref equity groups, these are the types of deals that Greg and I are now doing. But we're able to bring in the everyday investor, John Q. Public and Jane Q. Public. Now we can offer those types of investments alongside of some of the big pools of money. But we're buying 2, 3, 400 unit multifamily apartment complexes in the Sun Belt and the Carolinas and Tennessee and the Midwest. And we're working with operators. And when I say an operator, they're the people who get the deal under contract. They get the debt. They have the property management companies. They do the asset management. They do some of the investor relations. They do the accounting. They do the legal work, right? They do the renovations. They do all that stuff, the leasing, the evictions. And you're just coming along in the process as a passive investor. And the idea is that you invest a portion of your capital, say 100,000 or 50,000, and in return, you're getting either monthly or quarterly distributions from cash flow. And whenever there's a liquidity event or a refinance or a sale of the property, you get your original capital back plus any appreciation that the property may have generated from the sale. Now, that was a lot of information, so I'll throw it back to you. And if you want to open that up a little bit.
Yeah. So mostly your focus right now would be on the private equity side, having the investors that raise that come in with their capital. The decision they're making is to say, do I go with Cityside Capital? Do I put more into my Vanguard account? Do I choose a syndication directly?
Sure.
Right? That's the decision that they're making. Beyond that decision, they're not involved in the daily operations of the business like they would be. I mean, I manage thousands of properties for hundreds of clients. We need them involved usually over $500 decisions, right? So the difference with this is they are investing with Cityside, and you and your brother and I'm sure the team that you're building out or have built out or will continue to build out are vetting the opportunities to then go into. Are they your own deals, or would they be mostly at this point other people's deals where you're providing liquidity?
Great question. So we work with 10 operators that my broker dealer has done two things with, right? We have vetted these folks on the front end, right? So everybody wants access to capital, right? And our broker dealer, we've raised over 250 million in the last 2 years. And people hear that and they say, well, I need capital for my deals. Will you guys raise for me? And the answer is no. You have to go through pretty, what's the word I'm looking for? Not intense, but a pretty thorough due diligence process. And it costs money to do that. So if you're willing to go through the process, if you're willing to do the disclosures, if you're willing to undergo our due diligence, and what does that mean, due diligence, right? Because I think that term gets thrown around, but nobody really cracks that egg and tells people, well, what does that mean? Well, for us, it means that my broker dealer, the guy who owns our the broker dealer that we work with, he actually goes out and he meets you for a couple of days, and he walks your properties, and he meets the property management company, and he talks to the residents, and he'll do a site report. And simultaneously, we have a third-party due diligence firm called CrowdCheck, and CrowdCheck is doing a deep dive on a criminal background check on the principals of the company, and they're looking at your old, in your portfolio on the properties that you say that you owned and operated and sold. Well, they're going to go double check that, with the entities, right? Did the entity, XYZ LLC, did it own that property, and for how long? And what was the sale price, and what was the, purchase price, and does everything check out? Because in today's day and age, anybody can put together a deck. Oh, I owned, 40 million units and I've made $1 billion, right? Like, well, okay, cool. That sounds great. But let's see it. Let's make sure that you actually are who you say you are. You've done what you say you did. And then we have an underwriting team, and the underwriting team will look at if you have a current deal in process. Well, great. They'll kind of in real time see the trailing. They'll ask you for the trailing 12 months of profit and loss statements for the property, the most updated rent roll for the property. They'll do a market survey, right? They'll use data analytics firms like RealPage, Yardi, CoStar, and then they want your underwriting. And they want to see that your underwriting is in line with, today's standards. The debt markets and the capital markets have changed drastically in the last 12 months, right? What are your assumptions for expenses? In Texas, property taxes upon sale, they can go up significantly, right? So are you underwriting for that? So once we find out that, yes, we want to work with you, we agree with your assumptions, we agree with your underwriting, your past performance. We've, obviously checked in on that. You say you are who you say you are, and you're easy to work with, and we think that we're going to be good partners. Well, then you'll get invited onto our platform. So now that you're an operator and you're on our platform, now you have a deal, right? Well, now the whole process kind of repeats now, right? We're going to ask you, oh, great, you got a deal under contract? Send us the 12 months of profit and loss statement. Send us the most updated rent roll. Send us your underwriting. Our in-house underwriting team goes to work. If everything checks out and we say we want to work the deal, well, then our third-party due diligence firm will then go do a deep dive on the property. And then if everything checks out,
And
we will raise capital for
so
that
Tim,
deal.
is that
So the everyday investor
mostly
who has
for
capital to place into
down?
real estate,
Okay.
yeah.
Sorry, because we have a little bit of connectivity issues. So I think I started talking over you there. Could you just go back the last 5 seconds?
Yeah. So the everyday investor that has capital to be allocated towards real estate, well, they may not know the deep dive questions to ask. They may not have the resources, the time, just not know where to go to do all that, right? That's what we take care of. We take care of the due diligence on the front end, and we take care of the due diligence for each individual offering that we put out. Because as licensed, capital raisers, we have to satisfy something called a suitability requirement. We have to make sure that the issuer or the operator is suitable for investors, and we have to make sure our investors are suitable for this type of investment.
Got it. And are these investments mostly at the down payment and working capital requirements for a deal, and then some agency debt is being brought in as well? Or is it how do these capital stacks typically look for something that you're putting together?
So
or really somebody else is putting it together, they're coming to you for the capital. Where do you fit in the overall capital stack?
So you have the debt, right? That's its senior in the capital stack. And then you have the common equity, right? Let's not even put preferred equity in there right now. Just, you have the debt from the bank or the whatever capital provider. Then underneath that, you have the limited partner equity, right? So I don't know, we're doing a $30 million property in Dallas. We may need 15 million in equity to close the deal, and the sources of uses would be laid out in the PPM, the private placement memorandum. It would also be, the sources and uses of that equity would be put into the investor summary, right? So maybe it's $1.5 million or 2 million in reserves, and maybe it's 4 million or 5 million in capex or capital expenditures, or it's 2 million in renovations and 3 million for this. And you could see very clearly where is that equity being allocated to in the capital stack, and then the general partnership is obviously last in line to be paid. So that's kind of how the deals are structured, so that our minimums are usually $50,000. So now you can see very clearly, well, if I invest in this deal, here's the sources and uses of my equity. Here's the debt product that they're using. Are they using bridge with a rate cap, 3-year rate cap, and they're going to refi, or they're going to sell, or how many years are we doing? Generally speaking, we do 2 to 5 year hold periods for these properties. But yeah, I mean, it's very clearly put out there for investors. And if you work with Greg and I, our investors have our cell phone numbers, they have our email addresses. You want to go over a deal, then let's do it. We'll set up a time. So that's kind of the value of working with us. But if you have the know-how and the knowledge, you can feel free to go direct to the operator, right? If you know how to vet the operator and know how to vet a deal, and then by all means. But if you're not quite sure how to do all that and you want somebody else to help you with that, that's where we come in.
Well, my friend, you've certainly opened up the world for a lot of investors here, for a lot of listeners of this podcast, and I wanted to thank you for that. So in the show notes, we're going to provide your information, your website's information. At this part of the show, we like to ask, like, how are you giving back to your community? I mean, you are our first firefighter on the show, my friend. And are there some other charities that you like to support, or that you'd recommend to others to support? And then how do you take care of you, that mind, body, soul?
So I give back. I mean, I tend to mentor people now, not on a paid basis, right? But on just people helped me, and I want to help those who want to get started. I also coach my girls' basketball teams, lacrosse teams, t-ball. So I do that in the community. And then there's 2 charities that I like to raise capital for, and it's for the Alzheimer's Association, for my mom, who was diagnosed with Alzheimer's at a very young age. And then the Tunnels and Towers, T2T.org, and they raise capital and pay off mortgages for our fallen soldiers and our fallen first responders. So those are the 2 that I love to help out and donate to. And as far as taking care of myself, I mean, I work out a CrossFit with my wife. We're not crazy CrossFitters. We're not going to the national games, but we have a great gym that we go to with some great folks, and we do that 3-4 times a week. And then I get up early. I'm up at 5 o'clock in the morning, and I get some reading done. I get some meditation when I can actually sit still for a couple minutes. Some quiet time to do some writing down, reviewing my goals. And I do that all before the craziness starts and everybody wakes up in the morning. So that's just a kind of glimpse of how I operate.
Oh, wonderful, Tim. Tim, the world is a better place with you in it, my friend. I'm glad that you're here. I'm glad that you do what you do. I wish you much success, and your family's health and happiness, and all your investors. And we'd love to have you back on the show in a little bit and just check in and see how things are evolving. You've done quite a lot since that triplex, pre-pandemic, and you've navigated well. And I just wanted to thank you for sharing your story with all the listeners and myself today. And love to have you back. Do you have any closing words for the audience?
You know what? I'll say this. As a guy that had severe limiting beliefs, you don't need a PhD every time you make a decision, especially if you're going to get started in real estate. Me personally, I need to know 80%, and then I'm taking some action. So it's really, get that education, and then you have to, commit and take the action.
Signing off on that, my friend. Thank you.
Okay.
Thank you for listening to Living Well with Rentwell. We hope you loved that episode.
Please be sure to head over to our website at rentwell.com/vision. We're giving away our free program called Vision Through Purposeful Action. If you're a busy person, if you struggle with finding the time and priorities, or if you're experiencing procrastination and overwhelm, this free course will help you with that.
We wish you a blessed day. Thank you for tuning in, and check in later.